All right, so we are now on the charts. I hope all of the video and screen recording look good. My computer has been struggling a little bit. As I said, today we are breaking down this dollar yen position um, that was taken last week on Thursday. Yeah, so the interesting thing about this one is that it was my featured pair in last week's newsletter. So you can see the entire thought process of this trade from the weekend analysis all the way to executing on the actual position. So there's a few things that we need to keep in mind on this position. I want to start off really quick by hiding this and going through the higher time frame. So we can very much see from the DXY breakdown that that I've done in the newsletter as well that this is very similar. We have the strong push down and we're starting to form this potential correction over here to continue to the downside. So that's the overall picture. Another thing that I was mentioning in the newsletter was this bottom trend line, which was kind of put there prematurely. We know that we could be forming a much larger structure and coming all the way back down to this bottom trend line over here, which we ended up doing on the DXY. So the idea was that either we could be forming this push down continuation to tag this ray line before forming the much larger structure like so, or we had already found the base from over here and we had started to rebound and move to the upside to form a little a much tighter channel over here, like this one. And this is very much why I wasn't looking at any risk entries in this, because in case we had found this bottom and this would hold, then we could just be pushing through all the way back up before potentially reversing to the downside. So that's the higher time frame set. Now moving on to the 4 hour, I was looking at this 1, 2, 3 over here, which we can actually replay a little bit to where I was during the Sunday analysis, which was about here. We had just started to push off, get a little bit of a correction here, and start pushing to the upside. So the picture was very much to look for a completion of the pattern like so. And we had two areas highlighted, which were these two ray lines. So the first one being this value area over here, which kind of coincides with this override section over here and this first hook point where we kind of corrected and then pushed to the downside and then started forming this. So this would be the first area of value. And the second area of value would be this larger hook point over here. So this is the first reason why I was not looking for any particular risk entries at this first area alongside the potential of the bottom that I mentioned before on the higher time frames of going back to the upside. As we developed throughout the week, we very impulsively reached this first area of value. So at this point, I was waiting for a strong push down, which I usually tend to, if we do wrong tool, this one, roughly 50%. It doesn't have to be exact, but yeah, just a strong impulse down followed by ideally something that we can see on the 1 hour and then refine to the 15-minute if necessary. So that was the plan. As we can see by going forward a little bit, is that we kind of trickled around a little bit. There's no real strong candles in there. We kind of trickled moving down. And at this point, we can start seeing a little bit more impulsive candles, which was good signs, but we just never formed that correction. And instead, we kind of developed a little bit more of a pullback to continue and move back once again to that area. Going a little further, we just tagged above once again, and got a very nice wick over there. And then we trickled around a little bit, and then we got suddenly, this was some news, and we got this very strong candle to the downside, which was very good. So the thing that I was interested in at this point was whether to see this was some sort of expanding continuation given the wicks over here, to potentially either create a 3-touch and then sell off from there, or just a push up expanding continuation and move up towards that second area of value that we were looking at before. So personally, I wasn't going to get involved in something very tight over here. Just for that fact, I wanted to see some more development on the structure. So moving forward a little bit more, we started trickling around. So ideally, at this stage, I wanted to see two things: either a strong push down followed by a 1-hour continuation that I could get involved with a risk entry over here, and kind of ignore these wicks, just cut through them. We are kind of below this area. This is very much news and volatility, so I would just ignore those and just take a 1-hour flag like that. Or the second alternative would have been to fill the wicks and form some sort of larger continuation like so, which would kind of be a little bit larger than this impulse, but it wouldn't be a complete negative that would just make me not take the position. So instead, as we started developing a little further, we kind of got this type of pattern over here. So let's build it back up. I had this top ray line, which was the area of value. I drew it on like this, just ignoring those volatility wicks over there. And I was kind of looking for something around this ray line area over here. So if we move on to the 15-minute real quick, we had two things possible. So I had the ray line, which was the area of value. I had this bottom trend line, but we could also spot something like this, which was a little bit of pattern separation, which was not necessary for the entry, but very much so to understand the structure. So this was our area of value, and I was looking at this 1, 2, 3 to complete for a potential risk entry to the downside. Obviously, the wicks are not as prevalent over here on the 15-minute, but I just kind of ignored that as we had ruled them out on the 1 hour. So this was pretty much the trade idea that I was looking for. As we developed a little further, we started forming a little ascending formation within. So I'm going to draw this back in really quickly. But as we started forming, we kind of formed this. I went a little bit too quickly, so let me rewind a little bit. We started forming this ascending, which was visible on the 15-minute, but definitely it was much clearer on the 5-minute chart. So let me just go down to the 5-minute over here, like so. And we can see that we reached this little third touch over here. So now this is the interesting part of this position, which is definitely a little bit more messier price action. It's not your go-to picture perfect flag, but you kind of have to read between the lines a little bit and apply this pattern separation over here. But technically, the first valid entry is right here. So personally, I did not take it on the 5-minute. I waited for the 15-minute correction. So what we can see here is that at this point, this expanding formation wasn't the most relevant, but we can see that we can very much draw back the first pattern that we had, this slightly descending trend line to the top. So this is why I said it's a little bit more of a messier price action. It's not your picture perfect, given the wicks and this slightly descending nature of it. I've always had a little bit of an issue with this descending top trend line. Most of the time I do forget to put it on, and I just look at this top ray line like so, and sometimes it does kind of near miss like it did over here, and I just end up missing the trade. But it happened twice already, and after the second time I just swore to never make that mistake again. So now I'm very much aware of this bottom or of this top descending trend line type trades. And if we have a 1, 2, 3, as long as you can protect that ray line with your stop, which you very well could in this case, then you can take the trade. So I want to talk just quickly about this near miss. It's very, very slight. As you can see, we can struggle to see it on the 5 minutes. So I definitely don't class this as a near miss, just given that it's 0.5, so it's half a pip. So I don't consider that a near miss. And second of all, you can just protect it with your stop. So this was very much fulfilled in my eyes. We have this 1, 2, 3 with the 1, 2, 3 within, and you can protect the ray line over there with your stop very comfortably. So that's very much pattern completed and trade on. The other thing I wanted to talk about quickly is that this expanding that we had on just before, personally, I kind of disregarded this third touch over here, which I guess you could just go a little bit wider and protect that area as well. But it didn't seem very significant to me for two reasons. One is that we hit the override of this expanding with a 1, 2, 3. So that allowed me to just crop it and not protect that third touch, because it seemed that it was responding more to something like this, to this 1, 2, 3 within the 1, 2, 3. And I had the main value area, which was this ray line, protected. So that was very much the reason why I kind of disregarded that expanding over there and went back to this descending type flag. So this was your first entry over here with that retrace over there and the evening star formation that we had. So just being very meticulous, gonna measure the retrace, but we very well hit that 50% mark over there. So this was your first 5 minute entry that you could have taken very well, very comfortably with a 12 pip stop or something along those lines. So personally, given the structure and being descending and the wicks, I kind of preferred to wait for the 15-minute close and just set my entry over here. So let's actually bring up my actual entry. There we go. And I went with a 16 pip stop, which was slightly larger than if I would have taken it on the 5 minute. So I believe it's just one more candle. Yeah, about one more candle after that 5 minute entry. And I could have gone a little tighter, but I just gave it those 3 pips extra protection over there. So the 1 hour had obviously closed already, which was very nice, and just triggered in and kind of went straight into profit. So as the hourly closed, regarding the management, I just moved to break even. If we can get that like this. So I moved to break even as the hourly closed. And then if we continue, as we closed that second candle, I kind of locked in somewhere around here. So let me just unlock it, copy the price really quick so we have it for after. But yeah, just kind of locked in that 2% mark and kind of started putting on this ray line like this. So first of all, I moved it to the bottom of this correction over here. And as we started developing a little further, I started getting a little bit more aggressive over here, which I first locked to this 3% area. And as we got this full retrace, I just locked in about 4.5. If we look at the 15-minute over here, I locked in 4.5 like that, and it gave it pretty much ample room to form some sort of continuation where I would be looking for a scale in like that. So yeah, that was pretty much the dollar yen trade. I got tagged out shortly after, so it trickled around, and then yeah, it just started moving to the upside. So out for around 4.5%. So I think it was a very, very nice trade. So the important thing is that this larger flag over here kind of um, compensated for the potential of this expanding over here, because we could very well see this as a push up and a bull flag to move to the upside. But obviously, given the unexistent impulse over here and the flag compared to it, kind of invalidated it and made it a valid sell by taking it with a very precise entry on that, with that little 3-touch ascending within the 3-touch as well. So yeah, I hope this was clear, and please do let me know your feedback in the comments, and if you took the same position as well, or if not, why you didn't. And yeah, I'd be very interested to know. But I hope you enjoyed this first trade recap. So yeah, hope you enjoyed it, and please do let me know your feedback. I would very much appreciate it.